Hey traders, Justin here. Let's jump right in. Tuesday, the 24th of November, the markets are closed. We've got some after hours action going on, but what's going to be happening next? We've had a lovely run up into Thanksgiving, which happens later on the week in the US, and there's positive vaccine news, and the markets are loving it. But for how much longer? And I really want to take a quick look at the market internals. This data is not derived from price. This is index data coming from the US markets, the NYSE, and this gives us market breadth information. You can't get this sort of detail from price. It gives us a look under the hood, inside the engine, what's coming next. And really, I want to just take a quick look. There's not much for us to look at here, but I want to just quickly show you here. The VIX is sitting right around 23. It's not doing a hell of a lot. We can see the rate of change is not moving much in the VIX, so we're not expecting too much out of the VIX. In terms of number of shares on either side of the moving average, here we have the 520, the 50 day average on the S&P 500, and they are starting to get overheated, but nothing too much to worry about right now. And again, the RSI and the VIX very, very slow. However, we are approaching the upper Keltner channels, and I want to just show you this next slide, which gives us a bit more of a warning. So what are we looking at here? We're looking at the put-call ratio, and we'll just highlight it for you so you can see that more clearly. Here it is here. This is the 3-day and the 10-day average of the PC ratio. At 0.5, that's going to have to cool off. That's just going to have to cool off, and when it does, prices will cool off with it. Now, let's take a look at the 5-day average, the 20-day average, the 50-day average, and the 200-day average. The 200-day average right now sitting with 90% of stocks above the 200-day average. Yes, it may well be bullish for the longer term, but it is not bullish for the short term. Even the shorter term average is sitting at 82, 84, and 80%. Combined with this put-call ratio, the overwhelming probability, the path of least resistance is going to be down. So if you are a bull going into the weekend, if you are a bull going into the end of the week, on the S&P markets, the US indices, or any market that is related and is going to follow the US markets, please be aware the internals are pretty extended, and the odds of a small pullback, I'm not trying to call the top here, but the odds of a small pullback, that is definitely the path of least resistance on the indices right now. All right, let's move across to Forex and see what is happening in the foreign exchange markets. And you can see we're looking at the Forex Scanner here. We are busy scanning. Let me just show you here. We're scanning the 600 EMA. You can see here, these are all, this is the distance to the 600 EMA on the 5-minute chart across the major pairs. This is the maximum excursion from the mean. We're scanning 250,000 bars of back history. Yes, 250,000 bars back is what we're looking at. That is the maximum excursion from the mean in the last 250,000 bars. Those are the average excursion. That's looking at the last 4 or 5 excursions from the mean, and you can see these are our probabilities on mean reversion here for right now. And there's nothing there on the 5-minute 600 EMA that stands out as demanding or warranting our attention, but the scanner will continue to scan through all the moving averages and all the time frames and send through an alert should something of interest pop up. We did have something coming through a little bit earlier. Let me just see if I can find that. Give me a second. There we go. Yes, there we go. And so you can see over here, this is the alert that comes through on the telephone, and I just want to just draw here. You can see it tells you what the instrument is. It was on the pound yen. It shows you that it was the 400 EMA, that it was on the 5-minute time frame. Probability on the average excursion for mean reversion is 91%, 87% for the maximum excursion. Profit on offer was 32 pips. It is a small trade. It's a 5-minute 400, so 32 pips is pretty standard. And what this is talking about when we see these probability numbers is when you cross-reference the current distance from the mean, the time spent away from the mean, the rate of change of the mean, and cross-reference those three calculations across the previous 250,000 bars of history, this is the probability of the trade closing at break even or better. So it's a risk factor, it's a risk measure, and it also gives you an idea of the profit on the table. But of course, how much of that 32 pips the market gives us is the market's decision. What we're interested in is managing risk first and foremost. So that's it from the Forex side right now. Let me just get rid of all these drawings. And before I leave, I wanted to just remind everybody of our Black Friday special. This very subtle message across the screen here. Guys, the Black Friday, the scanner, the market internals course, everything in the shop is going to be 50% off. This is once a year. It's not going to be repeated. It's a fantastic deal. If you want to get involved, it's starting on Friday the 27th. It runs through until Monday. It's 4 days only. Type in 50% at checkout and the deal is yours. Guys, thanks again for listening. I hope that's useful. We'll catch you next time.